Good morning, everyone. Welcome to the War Room. This is your European session. My name is José Ricaurte Jaén, directly from Dubrovnik. And as usual, our favorite, yes, he is our favorite, data analyst, data scientist, full-time, soon to be full-time trader, but he's one of the best. We have data scientist directly from India, Mahesh Tang. How are you, Mahesh?
Good morning, Jose. I'm doing great. How about you?
I'm doing awesome as well. It was all the way working until 3 a.m. Teaching some classes, but I'm excited. New day, new opportunities. I'm just going to go over a quick review what we had yesterday, our intraday trade ideas, and share with the audience. So we proposed, well, you proposed based on Roadkill Fatman. We had an entry long gold and we exited take profit. Eventually we know what happened to gold. Just gonna really quickly share with the audience where is gold so far. Just if I could take one of the trades. Let's take a look at gold. We see now where's gold. It had a break up all the way. This level area went up another $27. We exited at 1,698. There's a sort of double top so far in the short term. We'll see what happened next to gold. We profited yesterday. It was a great entry. Here's the value for our intraday account. Then as well, you talked to us about the pound Canadian dollar, which is the weekly trade of the week, and we applied that as well for the intraday idea. The high, we entered around 174.31. The high of that session was 174.94.97. So not too far, only about 60 pips drawdown. And then this is our exit at, as we always mention, New York close. That was 2 minutes after past New York close. This is what we had, a couple of small trades. And sadly, I was looking to add in the direction of the trend, miscalculated, got our stop loss hit 23.2% Fibonacci, went all the way down to 32.8% Fibonacci. So it happens. The count so far for the week, we are about $4,200. That's a 40% gain. Last week, we had a couple good trades, but we didn't make any money. Risk capital protected, or work capital has been protected, and now we continue the week. I'm still have some a little bit of action going with this dollar versus Swiss krona. Lack of liquidity yesterday seems to be retracing for almost 1,000 drawdown. We'll see how it goes. I'm looking personally to close this trade tonight at New York close. Mahesh, I know you have exciting stuff. What do you have for us today? The floor is yours.
Thank you, Jose. Let me just share my screen.
Let me cancel it. There you go.
Okay. Do you see the screen?
It's loading. There you go. I see your screen.
Okay. So what we have here is, it's a 30-minute Fatman. Okay, this is the CHF Swiss franc, and then we have the JPY right at the bottom. So we have the Swiss franc, which is oversold condition, and you see it's beginning to, kind of roll over or start curving downward. And you see the JPY starting to curve upward. And below we have the 15-minute time frame. So the 30-minute time frame in this case is the higher time frame, and the 15-minute actually shows that the cross has already happened here. At this point, CHF and JPY have actually crossed. So on the right-hand side, we have the charts. We have the GBP JPY and CHF JPY. Let's first have a look on the CHF JPY. It reveals the same story. It shows the CHF being oversold and beginning to curve. JPY, being overbought and beginning to curve. JPY is oversold and now it's coming from the lows. So what's happening here is, if you just go down to the lower time frame, we actually see a cross has already taken place. The JPY started to come in strength and it crossed upward, and the Swiss franc is going down. So I believe that this is how it's going to translate now. We just wait for the sell signal to appear on this time frame. But this is a head start that we're getting here right now. So we can, you know, build our positions as much as it tries to go up and try to retrace. We can keep on building our positions. And even if we enter at the moment right now, I think 17 pips stop loss and about the same 17 or 20 pips, you know, take profit should be good enough.
Okay.
This is my analysis for the intraday trade. Also, I think we can consider the same thing on GBP, JPY as well, but we will have to wait for the confirmation because at the moment it doesn't seem to be giving up. GBP seems to be in strength. On the GBP, we don't know what is causing it to be strong, but just have a look at the Fatman again. You know, at the bottom, if you see, we see that on the 15 minutes, it has already crossed over right over here. So, but of the two, because the Swiss franc is totally overbought and the Japanese yen is totally oversold, and we see it is starting to, you know, cross over and come into strength, the yen. I think the best trade in this scenario for me would be CHFJPY. We can short the CHFJPY. So a couple of exit methods, what we can think is we can just stay with the trend, and when we see the trend changing, we can get out. Or as I just said, if you're happy with 1:1 risk to reward, you can just do that.
Okay, perfect. I like the idea. So like, as you said, we have always the confirmation on the Fatman. We look at the Fatman is our leading indicator, curves and strength. And it tends to give you a little bit of notice, a weighing of that notice. I probably say sometimes up to 4 to 6 bars before the action happens. It all depends what time frame you're looking, but that is the idea. Now, absolutely, I already started shorting Swiss franc against Japanese yen. Symbol CHFJPY. We added one standard lot. We're building the position. Let's see how it goes. We'll get in the time frame. Probably won't be in this trade more than 4 hours.
But I think it looks even better on the. Just have a look at the CHFJPY, Jose.
Yes, absolutely.
On the 5 minutes, I think it looks even better.
Yes, we already enter. We'll see how that trade goes. We'll probably aim to 20 pips. Let me just have set the stop loss to 20 pips. If it moves, it moves. Let me just set it. 25 pips.
You know, you made a great point, Jose, because it is the leading indicator of the currency strength. It gives us a prior notice. So what we can do is we can just enter in with lower, lower lot size. And the more it goes in the opposite direction, we can just start building it up. We can reduce our risk and increase our reward that way.
Absolutely. So what I did is exactly what you suggested all the time. I just added one center lot, left a lot of ammo ready. So if it moves against a lot of us, like let's say 15, 20 pips, that may not happen. We still can enter another trade and start targeting our short take profits. Okay.
Sure.
Anything else you have on the table, Mahesh?
Not as of now.
Okay, perfect. So yeah, we're starting again. European markets are open today. We're going to take a look at this. Now, myself, let me share my screen, Mahesh.
Let's take a look. Okay, the floor is yours now.
Thanks. Let me just see what we have. And I'm going to share another view. I think, you know, Mahesh, I've been short, I think from 141.45, somewhere around this area. Made sure the US dollar Canadian already in profit about, I will say 200 pips. I can't lose. I'm break even at 140. That's it for me. I don't want to risk anymore on this particular trade. Now, if we look at this is for the audience. How low it may go. And there's a lot of discrepancy. This is where we need to understand technicals and fundamentals. There's a lot of saying the OPEC deal wasn't the best. Okay. The OPEC deal wasn't the best. Now, what we heard at the end of the day is it was a 9.7 million barrels per day cut. However, the G20 announced that they may be adding up, and this will go all the way to 20 barrels per day, 20 millions. So there you have a little bit of a change. The reason why the Canadian dollar is taking down CADs, appreciating Simply is because we're in an environment of dollar weakness. So with a little bit of help of the OPEC, now the Canadian dollar is relatively attractive against the greenback. This is what you have to consider. This is where you have to play the fundamentals. You need to avoid being one-dimensional. You need to look at different angles and look and understand how that translates into the currency. Having said that, the technicals all the time, they do matter. And this is one of the things I said, Mahesh, after a long day yesterday, is, Mahesh, look at this signal, this level. Somewhere around.
Just saw that.
And then also, I'm going to go to a lower time frame. This is roadkill on the daily chart signaling the entry. And then 2 bars later, 1, 2, look at what happened. Allow me to zoom. Let me just clean my screen. I want everyone to see this, the power. And I talked to Randall Lindsay yesterday and I said, look, this is state of the art technology, and technology as the Lord set us free. Look right this level, still with a little bit of momentum, but we know that it can fade. There's diversions. A lot of things may happen. Now, this is the signal, and 1 to 2 bars later, 154 pips.
Wow. 154
pips on the daily chart. Now, if you were enter at the bottom, you're talking 139.26, your risk about 100 pips, 120 pips. On the daily chart, that's nothing. And then look where we are now, 160 pips in profit estimated. How low we can go? Because that's a question everyone has. All the clients have. The audience at Market Traders Daily, they may be wondering, okay, fine. Where do we go now? Well, simple. As we use trend Fibonacci, in this case, it's not the trend Fibonacci, but it's Fibonacci as it is in an expected direction. So we have the range. This range has been about 760 pips. And then the projection all the way from this area. Look at it. The 50% Fibonacci, 142.93. What we have at least level, the mathematics they're explaining the 143. The big institutions, Mahesh, they don't want this pair trading above 143. And then you see 1, 2, 3, 4, 5, 6.
Yes,
6
right.
daily sessions. The dollar Canadian was unable to break the 50% Fibonacci. That has to tell you something. I mean, it's our face, guys.
Absolutely.
If I can see, you can see, Mahesh can see, Barclays, Goldman Sachs, JP Morgan, all those big boys, they see it too. And with that information, understanding the range, we project and we have as take profit on a daily chart. Remember, a lot may happen. Market may go sideways. And even it may retest the 23.6. I don't think so. We'll see. If it does, my break even, as I mentioned, 140 with clients. I'm out. I take my money. It's over. It's over for me at a big profit, almost 240 pips. If not, if we have a continuation, we rumble. As long as I didn't touch 140, I'm still in the trade. And then I'm looking 135, we'll say 135.60, Mahesh. And altogether, we're looking at continuation about 250 more pips. Okay. So our target, I don't have a trade. What do we do? Let's do something. I will also add a trade. Let me just add it to, but intraday only. I will take some position. Let me quickly move my way around. Share as Mahesh is sharing. We have, this is the trade, Swiss franc, short Swiss franc against Japanese yen. And let me bring dollar Canadian on an intraday. Our high so far is 139.06. I will take the same risk as Mahesh, only one standard lot. And if it goes against me a little bit, I will build up my short, my intraday short. Hi, always add some notes. And I don't want to take more risk than the 23.6% Fibonacci, which is 140.90. That's all the risk I want. And I know I want at least 35.80. That I think is going to happen? Probably. But still, at 10 p.m., close of New York, I'm out. Here we go. And I still have room to build my position. Look at your trade, Mahesh is already in profit.
Mm-hmm. Yeah.
We're in profit. Okay, so let's see how that
play out well.
Yeah. So we see how that goes. Now, there's not much happening. Indexes real quick for our audience. Let's take a look what we have on the table. What is coffee doing? As usual, quick review. Seems, do you see the coffee chart, weekly chart, Mahesh? Yeah, so look, we have a probability, we have a setup. We have been in this trade for almost a month with clients. We're targeting initially 130, eventually 140. Let's see how it goes. This is what coffee is doing. Twitter, nice. Yeah, it's going very well. We already added a second position, so we're building up in the direction of the trend. Twitter seems that may be moving to $33 soon. See what I have. Where's the German DAX? Okay, here's the German DAX. We take a quick look at the German DAX. We're trading right now at 10,663. I wouldn't be surprised we make a move to retest 11,249 in the next 2 weeks before the end of April. Let's see how is the New Zealand Japanese yen, another important risk on situation. There's a little bit, look at Fatman. Mahesh, look at Fatman. Blue, please. Everyone that is watching this video, take a look at Fatman. New Zealand dollar, this is bluish, purple, Japanese yen, and look what it's doing. A multi-week reversal is being set up. So Fatman is usually giving us the indication this may bounce a little bit more. We'll see, but we're positioned for a surprise. Always have on, right now, I suggest you have on your watch list based on a lot of teachings from Mahesh and how to use Fatman, New Zealand dollar versus Japanese yen. And one more before we go, let's see what is the NASDAQ doing. NASDAQ, basically looking at this trend Fibonacci on the monthly chart, we can see how it was the NASDAQ, one of the first equity indexes to land, and it landed on the fifth exponential moving average around 6,672. I cannot lie. The evidence is in front of you. Look at it. That 50 exponential moving average was also confluenced with the 50% retracement on this price action that came all the way from January 2016. Critical. How far we can go? I'm not surprised. This year, this equity index will recover and will be back at 9,762, and why not a little bit more? In the short term, if I'm looking for pullbacks, I know this is not what technical analysts will love, but this is pretty simple. If this is the recovery, I will be looking at pullback all the way to the 61.8% Fibonacci, and I will be a buyer again around 7,000. If this, what it means, if it drops, I'm still a buyer all the way to 7,800 for the NASDAQ. So guys, this is all we have for today. We're back. Today we're back. New York session. We'll take a look at stocks. Let's see what happened. Mahesh will come back with new opportunities. Fatman, Hawkeye Traders Indicator, they work. Please note, they work around the clock. Volume is your leading indicator. Mahesh, I think you want to say something about, you have a quote for that, right?
Yes, regarding the volume or the Fatman?
Both.
Okay. So volume validates the price for you. You can only know if the price is right or not based on the volume. So volume leads it, volume validates it, volume also appreciates the price. And pertaining to the Fatman, we only got to say, if you're not trading with the Fatman, you're a blind man.
That's right. You're a blind, and we don't want blind people in this group. We don't want blind. Yeah. Thank you so much, guys. On behalf of my hashtag Data and Science Director from India and myself, José Ricaurte Jaén from Dubrovnik, We thank you guys. Enjoy your trading, and we see you soon. This is the War Room. Ciao.
Bye.